there's a short and a long answer. The short answer is we determine when we're going to sell based on what type of returns we can get when we sell. That's the short answer. And if those returns are going to hit the projections, then we're going to consider it and likely will sell. If it's going to exceed the projections, then again, we'll consider it and likely will sell. If it will not hit the projections, then we will, but there are some things on the horizon from a market standpoint. Maybe we're in a market that just lost 50% of the employer base for whatever reason. I don't know why, but maybe that's what happened. And we don't see a way that that's going to get turned around in the near future. Then our job as general partners is to focus on capital preservation and mitigate risk as much as possible for our investors. So while returns are great, losing money is worse than as good as getting a return feels or is. So we want to first and foremost protect the capital that we have in the investment. So we would look to sell if we are not hitting, if we wouldn't hit the projected returns, but there's something there's a variable out there that we see is going to be present in the near and long term. Then we'll get the money back to the investors and get whatever type of return we can, and then move on with something else, and know that we have a variable we need to look out for on future deals that we didn't see previously. So that could be, like I mentioned, some employers, and it could be an area that we thought would continue to be as it currently was when we bought it, but instead maybe a school district got rezoned, and we had to, and now the school district isn't, or now the property is no longer in the good school district, is in the bad school district, and that hurts the value of the property. So we see that as a long-term issue, not something that's short-term. And if that's negatively affecting the property, then we're going to need to figure something out. So that's ultimately what we look for. Can we hit the projected returns? Can we exceed them? Okay, then we're going to seriously consider it. And if we can't, but there's another variable in play that is on the horizon that we don't see going away, then we'll still look to sell, assuming that we can't push through that and come out the other side.